And I'm back again. So after we have explored how to set the initial stop loss and how to cut a trade and what to look for once price goes against you, now we will look at stop trailing and how to protect your position and what to do once you're in a trade. But first of all, I want to highlight the importance of the set and forget approach. And especially if you are new to this kind of trading, you don't have much experience with this reversal trading, usually the first few weeks you will do much better if you use the set and forget approach. So once you're in a trade, set your stop loss, set your take profit order. Don't be too optimistic on the take profit order, we will explore that later. And then just let price do its thing. Don't look at the trade again. Don't try to move your stop around. Don't try to manipulate your order. Just see and observe what price is doing, and you will learn a lot by that. And we have seen it with so many traders that once they start adopting the set and forget approach, they will usually do much better. And it takes some time to get experience with this type of trading. And after you have followed the set and forget approach, you will know much better what to expect from such a trade. And by then you can start using the advanced concepts of managing your trade once you're in it. So now I would just suggest you watch the video and you try to understand what the concepts of moving a stop loss are. But then in your own trading, if you are new, apply the set and forget approach and just observe what price is doing without interfering with your trade. So let's come back to our example. So we had this example where we had our initial entry here, we then cut it here, we got back into the trade. So the initial stop loss was here. If you re-enter on this trade, obviously your stop loss can go below this candle here, and then you can see price goes in your favor. We show, or price shows trend waves, first trend wave, second trend wave, and we have retracements in between. So in this, after this trend wave, we don't have a big retracement. You can see price stays above the moving average. Here we have a deeper retracement that even violates the moving average. So the general rule of thumb is that you always wait for 2 trend waves before you move your stop loss. So once you see that price has completed this trend wave and we are making a retracement, you move your stop loss below the last trend wave. So in this case, the trend wave here, it started at the bottom, and that's where you put your stop loss. Then you move it way above the point of break even, and then you're protecting your position. So in this case here, you can see that we have another trend wave here. It started from here or here, depending on how you want to see it. Then we see that the trend wave comes to an end here. We see that price is going against the trend wave. It's making a retracement. So at that point, we pull our stop loss here, and then we can already see that price is going against this trend wave in a much stronger way, whereas previously price not even made it halfway into this trend wave. Now price is trying to cover the whole trend wave. You can see lots of bearish bars, and by that point you can already think about cutting your trade manually if price didn't reach your take profit order. And if we just look at the price action or the scenario here, you probably would have been out of the trade by now. There is a major demand, there's a major supply area just here in this area, so it starts here, and you can see we probably would have been out of the trade already. But let's say we are still in the trade. You can see price is going against the trade in a very strong way, and then you can cut your trade. There's no need to wait for the price to hit the stop loss. And you can see that once the retracement becomes too deep, we break the moving average, and you can also see that we are putting in here the higher highs, which become much shallower. We're finding a resistance here in this demand, in this supply zone. So you can see how this all comes together to show us that price is not breaking higher. And we can also use the knowledge that we have gained about wave analysis to time our exit once we see that price is not able to break higher and it's going against our trade. Let's look at the previous example because it's a good learning opportunity. Again, if you remember, in this trade we had our first entry here. We cut the trade, or we got stopped out at this one. Then we got re-entry here. Let me mark that for you. So here is then the re-entry opportunity after this long candle. The stop loss went here halfway into the candle, and then you can see very nice trend behavior. You can see here we have trend waves going up, very well defined. If I can grab the arrow, you can see trend waves depending on how you draw it. First trend wave, very good trend wave here as well, and a deeper retracement. So you can see we wait 2 trend waves, which were in this case 1, 2, and once price is here, you probably would be out because here is a major area. So this is probably going to be our take profit area when we go into the next video. But if you see the price is going here, it's making this retracement, you are still in the trade, you will then pull your stop loss well above break even and then protect your position if you still want to ride this trade. And we will also explore later how to let winners ride if you are not getting out of them initially. So you can see that after 2 trend waves, we move our stop loss to the point of the last trend wave, and that's how we protect our position. And also one important thing is to understand that our main take profit concept or our main take profit tool is that we use fixed take profit orders. We usually don't let our trades fully run, so we always have a predetermined exit point where we will take all or at least most of our profits. And so you don't need a trading stop loss as much as when you follow other trading methodologies, because in the reversal world we always know exactly where we want to get out for the most part, and our stop loss management is just designed to help us protect the position so that once price is moving in our favor, that we protect the risk and we protect our position by moving the stop loss. Here's another example. If you remember this one, this was the trend line trade. You can see a nice trend line here, and then we broke below the trend line, we came back into it, we retested it. So we had 2 ways of entering. Here was the first one. The second one, the stop loss goes here above the previous resistance area, which is in this case here, and then you can see price very nicely sells off. There are not a lot of retracement in such a trade. You can see price is very strong outside the outer Bollinger Bands, and in such a scenario I would move my stop loss along the moving average. So if you see that price is staying outside the moving average, we don't have a lot of retracements or reversals, we don't have a lot of pullbacks in between, then once you see the price is finishing such a trend wave, which is in this example this one, we pull a little bit inside the moving inside the Bollinger Bands, but we are not really retracing, we are still grinding lower, as you can see. So if you see something like that, I would move my stop loss below the point of break even. Once you're in this range, you can definitely move your stop loss and then protect the position. Then you see price is going further down, so you can trail your stop loss always along outside the moving average here and then protect your position. Probably by then you will be out of your trade anyway, because here is the major support area where we would have taken most of the profits. So you can see the stop loss again is just designed to help us manage our risk. Here was the entry, we had our stop loss move to this point here, so at that point we had locked in some profits and there was no way that we can lose on this trade again. So again, the stop loss has just the goal to protect the position, and we usually exit our trade for the profits manually based on chart context, which we'll explore in the next video. Here a different market type, you can see again the trend line. We broke the trend line. As I said, this was tricky here. You probably would have been taken out if you are conservative with your stop loss above this high with this long wick. If you found a re-opportunity here, then you can also see we have lots of volatility in such a market. You can see frequent breaks of the moving average. So this one is quite hard to trade and hard to manage, and it's probably very challenging for the most part, because those wicks, those long retracements can easily get your stop loss. But as you saw in the previous examples, we are usually pretty late with managing our stop. So you can see the re-entry was here. Then you have one trend wave, two trend waves, and once you see that price is moving here back against the moving average and back against the trade direction after the two trend waves, you move your stop loss here above this swing point. Here was the re-entry, so we are still in the negative, and the stop loss is still above the entry point, but that's not a problem at all. We don't just move a stop loss to break even for the sake of break even. And then we have two more trend waves. You can see one and a larger one, and by then you could have moved your stop loss here to the point above the recent swing high. Again, if you see that the market has a lot of volatility, like we can clearly see here, very deep retracements all the way, also a lot of volatility here with all the spikes, then you usually give the trade a little bit more room to breathe. And if you don't feel comfortable with moving a stop loss in such a market, there's nothing wrong with that. As I said, the set and forget approach is a very good strategy. Just leave your stop loss at a very safe place. Don't try to pull it too close, and you will usually be fine, and you don't have to actively monitor or move your stop loss. So a few examples how you move the stop, what to look for when you move the stop. You use either swing points, and you always wait for two trend waves in the direction of your trade, or if you don't see a good trend structure, you just see prices dropping, then you can use the moving average to trail your stop loss along the way with you. And in the next video we will get into setting targets.